Good morning, peoples. Let's jump in here on Misty ex-dividend day today, meaning if you wanted any funds, you needed them to buy them yesterday because today you should notice that your fund in the pre-market is pretty much down the amount that they declared they were going to pay. It happens to every single dividend stock in the world. It's just when they pay a big dividend, it's much more noticeable. If some fund, if you're in a tobacco company or something and it's paying you 4 cents every quarter, you don't even notice that it's ex-dividend date, right? But when you see a stock drop $1.80 something like Misty, then it's pretty noticeable. Even a dollar, I mean, even 70 or 50 cents on these stocks, you see it. Um, and people always say, well, the best deal is to buy it on ex-dividend. In general, that's true, but it doesn't hold up all the time. What if the markets get some pre-market news and it's rip-roaring to the upside? It may have started down there, but it could make up the whole gain or a large percentage of it. Yeah, you got it cheaper than you normally would, but it's just no guarantee always, right, that you're getting the lowest price. Clearly, um, you typically get a lower price than on declaration day. I'll give it for the most part. All right, let's jump in here. Now, there's a nuance. This is the first one that I'm reporting on, but Yieldmax normally posts two things to its website. They post what's known as holdings, which tells me at the end of the trading day on the 4th, on the 5th, I know what they held. So after the market, Yieldmax comes out and they post something called holdings. I can see which options they still hold, what put and what call, how many of the weeklies do they still own. But they also put out something most of the time called interday, and that tells us if they bought something or they sold something and they rolled. We see the price, right? So I can look at holdings and ascertain, well, they're down 500 weekly calls and they're the 136. I'm making up a number. Then that means they sold 500 136 calls. But if I don't have the interday, I don't know what price they sold them at. I can guesstimate. I can go back and look at the trades and try, but it can have a range. So it's a guesstimate. So the net is they didn't put an interday out on any of the stocks. So there's no ability to reconcile yesterday. However, I have the holdings. So I know that all of these 9/6s that sometimes they wait till the end of the day. But remember, we were so far below a 145 and a 143 and a 138 and a 137, even a 133. They took all these off the table because I look at the holdings file and there are no more 133s. Or sorry, there are no more 9/6 expiration calls. And that makes sense. We were so down in our synthetic or in our underlying price that we rightfully took all the remaining ones left for 9/6 off a day early. The only problem is I don't know the price. So I just use 5 cents, right? Because they weren't going to be much, right? And I know that which by the way, all these add up to 35,115 in a quantity. These were sold on 9/4, the 9/13. So I see that they now own 35,115. So I know all these were taken off the table because there's no more that they own. So I put a guesstimate of 5 cents. They didn't pay much. I mean, it could have been 8 cents, it could have been 3 cents, could have been 10 cents. So I just, they could have had a few different prices. So also, I don't know what they sold these for. I know what they closed at. I know that at the end of the day, they were worth $1.915. Okay, these 132s that they sold. And so if I go over here in my holdings, that's how I track it. I track it at, so I'm guessing they sold around 201. It could have been 210, it could have been 215. Again, I don't know, right? So we can get close, but that creates a problem. That's on Yieldmax, why they sometimes don't post, right? Now, interesting, they had a lot of shares added, almost 800,000, 775,000, right? New shares. Why? Because it's on sale. Misty's going down. And then they make that declaration, and people are like, yeah, baby, I want some of that action, right? I want $1.80 something. So that's what you get. You get a lot of shares bought. And sometimes, many times, when they get shares bought, they will go out and put additional synthetics. They didn't change their synthetic at all. Now, let me tell you why. Someone will say, well, Bruce, you said when they get shares bought, they buy. They normally do. But guess what? They're paying us $1.80. Where do you think some of that money's coming from? Some of it's return of capital, right? Some of it's new people buying in and they're paying us out. Now, this isn't a Ponzi scheme. This isn't part of Yieldmax. I'm not casting aspersions there. I'm simply just saying, and somebody asked me a great question. John, thank you. On my comments on my last Misty, he said, hey, Bruce, I follow you. I trust you. I like what you do. You seem like you really know what you're talking about. I hope you don't take this question the wrong way, but why were you so far off on your estimate? On your sheet over here, you know, you've been talking about $1, okay? And they paid $1.80. Did you miss something? Can you tell me why you were off? Because again, you're pretty accurate on a lot of things, you know, and I have a lot of trust in you. I hope you don't take this question the wrong way. And John, I did not. It was a great question. I did, however, in my actuals video, talk about it. So I had two things that took place. I talked about the history of Misty and its declarations. Every time I make a declaration, they almost always pay out 50 cents more than I thought possible. So I lined up and said, hey, these guys earned 94 cents. They're not going to pay under $1. This is a dividend king. They've never paid, you know, a small amount, right? They paid $1.94. I thought this was going to be $1 even, $1.40 at the most. This I thought was going to be $1.80 in the dollar range, and they paid to. This one I thought it was going to be 250 or below. So they're always paying more than I think, than I know they earned, and B, that I think they're going to pay. So on this time, even though I'm writing over here what they're really earning, and by the way, I added in new money today, right? That's seven, you know, that 35,115 contracts, because they didn't hardly lose any on buying back those at a nickel, assuming they bought them at a nickel. And they wrote 7 million more. So that popped this up more. Okay. But I said in my actual, if you watch the video where I said prediction for declaration, I had $1.50, $1.52. It was 150 something. Okay. Why? And I even said in that, I don't know if they're going to pay this, but they always go over mine. So I went with $1.50. So long-winded answer. I wrote this all to you, John, but I think it's worthwhile. These are valid questions and it spurs a lot of things. Look, we as YouTubers, especially if we understand options, it's pretty hard to do what I do and a few other people do if you don't really understand options, A, and you don't understand accounting, B. So nobody is going to be able to really do this with any kind of accuracy if you don't understand those two things. So and then we get to a point where we see how much money they collected, right? So in my case, 94 cents. They said, well, they're not going to pay under $1. They don't want to be labeled a less than $1 payer. They're the king of payouts. So I said $1.50, and then what did they do? They came out with $1.83, I think was the number, right? I need to plug it in here. And I'm happy, but where does that come from? I can tell you. They didn't earn it, so it has to come out of some other money. And it'll probably be return of capital. And when you get your 1099 at the end of the year, if you're in a non taxed account, if you're in an IRA, a Roth, a 401k, it doesn't matter. You don't get taxed on your distributions. They stay in that account until you're old enough to take money out, or you do take money out and you pay your taxes. But those of you that have regular, I have both, right? I have a regular account that I trade in that's taxable, and I still have a IRA, right? That a rollover, a couple of those, matter of fact. So they're treated differently for tax purposes. And so an R return of capital that you get means they've classified it as some of the money that they had, but not really a income distribution, even though you're receiving it like that. And people ask me a lot of times, well, Bruce, what does that mean? Well, it means first off, by the way, in a normal tax, unless you have a business account, you have some special circumstances, or you're declared a trader and you trade, professional trader, and you mark to market and all these other things involved with that, then these distributions that we're getting when they're not on index funds, okay, because that's a different category. When they're single stock ETFs like this, it's just like ordinary income. It goes in and gets treated as ordinary income. So when they take a portion of your payment and they declare it as ROC, return of capital, you do not immediately pay income tax on that ROC amount. Let's say the $1.83 that they said 83 cents is return of capital, $1 is ordinary income. Then how do I count for the 83 cents? What happens, you figure out what you paid for MSTY, and this is only relevant when you sell MSTY. So then you go in and you say, okay, I bought MSTY for $22. Okay, I'm selling it for 24. I made $2. Hold on. But now I have an ROC of 83 cents. So I really made $2.83. It lowers your cost basis, right? So instead of $22, it becomes $21.17, right? So that's how, if you guys care to know not only what ROC is, how does ROC work? Now, this is for U.S. citizens, people. If you're in Canada and all that, I don't know, right? I can only speak as a long-term U.S. taxpayer. So that's how ROC is treated. So in a taxable account, it's advantageous to get ROC. Okay. But it also is basically saying it's coming out of the fund, right? So it's a greater chance that your NAV erodes. But so be it. All right, let me get into the crux of this. So in finishing this, we go across and we see, sorry, I'm in my August. We go across and we see that we got some cash flow, right, from that. Let's go look at weeklies. So now all those ones that we took back are all now setting in a 132. We keep dropping because the stock keeps dropping, right? So I think it's looking in pre-market around 120 or something. I was looking at this here. It is 119, 120.39 by 119.95. Right. So it's going to be down a couple of dollars or $1.83 just because it's ex-dividend date, and then it's going to do whatever it's going to do. All right. So That gets you up. So how far are we out with 6 trading days? It's $10, 10.4% out of the money. Not bad. I also don't think next week's going to be a very good week for stocks, so we shall see. Um, this one that we wrote before, we're out at, well, that doesn't make sense, does it? Why would this be 11? Oh, yeah, yeah. No, that does not make sense. 12-1, C7, C2, and 12-1. I don't get it. That is a higher strike price. Oh, okay. Yeah, it's duh, Bruce. It's further away because we're down here. All right. So this one's 10% away. We go a dollar more and it's 11%. I don't know. I just looked at that funny, guys. Sorry about that. All right. Let's go over to holdings that matter. And I left this up here so you can see the dollars involved rather than trying to show you over here. I mean, I can do it either way, right? But a lot of times I have room and it's just easier to show you. This one was already in place. This is the new one. So I did a guesstimate. I went out and said, hey, they sold it for 201, I think I claimed. Yeah. So I guessed at 201 and it's now like, what did I say, 190? Yeah, 191.5. So we've captured 4.73%. Again, they could have sold it for 220. All right. This one, they got almost $3. So we're 44% up on this guy already. Very small quantity. Now, my big question might be, why didn't you ladder? You laddered a lot last week. Now you don't feel like you need to ladder. Wonder why. All right. So let's keep going. What else do you care about? Here's the 775,000 shares, almost 4% of the fund. We closed at 2165. Now, where's Misty now? It's gonna, drop likely. Not with that payout. Let me check it here. Whoops, I gotta type the symbol, not a couple of the letters. I got 1970, I got 1983 by 1986. You see where the $1.80 is taken out? If I go in here and I say it's equal to that number, I think we were 183. It's close enough. I got 1982, so I'm showing 1983 by 1986, so that's pretty spot on. And that's what you see. So people buying, if you go in the pre-market and buy, then you are getting a good deal. Doesn't mean it doesn't go down today, and it doesn't mean it doesn't go down next week to lower amounts. So, you take your chances. Okay, so what else is relative here? Let's look. Naturally, when we went down some, what was the amount? I didn't tell you this, I don't think. So we were down 3% in Misty, but MSTR was down 4.23. I think I jumped into the whole thing about not having these values and all that. So I was negligent in telling you this. So not bad. So let's look at the holdings. And so when you go down, what happens? This drops, right? Because they didn't put any additional trades on. The only thing they did was take off all of their 9.6 remaining, which were this count, and rolled them into a 913 in a single strike at 132. Okay. And collected $7 million. And I will change that in my payouts to start my new counting cycle. I always start the new cycle on next dividend date. So I will make a new September tab and start doing all the Septembers. Okay. But you see that impact, right? Just a little drop is a big number here, right? So that's got to be dealt with ultimately. So let's go here. So technically, 7 million of this doesn't belong here. It belongs in my September month. Okay. But I just put it here for right now. So if we take that out, that's what this, if I go back and change this to P99, you'll see what it is and not include, right? So it's 81 cents, and it was more than 81, but this went up big, more shares, right? So I'm just showing you. All right, guys, that's what we got. You got your payout. Well, you will have your payout on Monday, peoples. Anyway, have a great day ahead. Hopefully, I didn't bore you because people ask me about return of capital. Some of you guys understand of it, some of you really don't. One more piece of information. When you're doing something like Roundhill does, it's not because they're weeklies. There are probably some other funds. Whenever you have an index as your underlying, that will be interesting for like the QQQY and Yieldmax. I don't know, but typically when you have an underlying index and they're writing calls or selling puts, whatever their strategy, and income is produced, they typically get to classify them as a 1246 contract, which is something futures has as well, and it ends up being a 60-40. What do I mean by 60-40? It's 60% of the profits go, I believe, to short income like ordinary, and 40% go to long-term capital gain rates, right? Which are taxed much lower. And so how do you distinguish short-term and long-term normally? So remember how I said dividends come in as this ordinary income. So another piece of information, if you buy a stock for $10, you hold it for 8 months and you sell it for $20, you made $10, right? So all that profit times the amount of shares is taxed as an ordinary capital gain or a short-term capital gain. Short-term capital gains basically, without, unless you have a business account or some other extenuating circumstances, you're taxed as ordinary income. Your long-term capital gains, how do you get a long-term capital gain? You hold an asset for 365 days or greater. So I bought that same stock, I held it for 12 months and 1 day. Okay. And then whatever my profit is taxed as a long-term capital gain. So a little clarification, a little bit more education on that, because I get questions from time to time, and some even more complex. And again, everybody can have a special situation or circumstance. If you really want to know accurately, go ask your tax person, a tax advisor, a tax professional. I'm not, okay? I just happen to have a lot of experience in it. Okay, so again, speaking of that, this is not financial advice. I'm not a financial advisor. This is for fun and education, people. All right, have a good one. Bye for now.